looking at this, and this is the latter part of your chapter, you should be able to then see equals is here, all of my assets are to the left, my liabilities are to the right, my owner's equity is also increasing to the right. So now, using this form, let's go ahead and draw our umbrella. Can you see here's our capital? And then let's go ahead and draw out my umbrella. So from here, do I see revenues are sitting here? I see my expenses are here, and I also have my drawing all underneath my umbrella. So working off of my stem of my umbrella then, do I have to the right of my umbrella is increasing on the right. To the left of my umbrella is increasing on the left. And left means?
Debit.
Perfect. And to the left of my umbrella is also my drawing account, and it's increasing on the left. So here's drawing, here's expenses, here's revenue, and capital. Okay? Can you see that all pretty good? Now let's try to get a different color that works. Now let's talk about our three statements. Where we're going with our three statements. The first statement is an income statement. The second statement is a statement of owner's equity. The third statement is a balance sheet. Okay? I'm going to start by showing you where we're going to. It's kind of like looking forward. Where are we trying to end up at first? So the third statement, and I'm writing here just in the middle. This is really not a liability, okay? I'm just using this part of the board. But I'm going to say that my third statement, being a balance sheet, is just checking at the end of the month or the quarter, whatever fiscal period that you're working from, and you're checking to see if all of your assets equal your liabilities plus your owner's equity. That's what your balance sheet is showing. So, assets equal liabilities plus owner's equity. And I'm going to, using this purple pen, I'm talking about assets, liabilities, and owner's equity. That's where we're going at the very bottom. Now, as I'm looking at this, how would I come up with my total assets? What would I do to find this total? I would do what?
Debit credit.
Looking at all of my balances, there's my total debits, my total credits. The difference between those two gives me a balance of $370. On accounts receivable, you have a balance of, I can't really read that, $650, something like that. Okay? So I'm going to then list, this is my balance sheet now, which is where we're going. We can't really prepare this yet. But we're listing all of our assets and the balances of each one, and we're going to come up with a grand total of what our assets are. Do you see how that will work? And we're going to say all of these assets on the left-hand side of this are going to be equal to this step up here. Well, it's pretty easy to find liabilities, isn't it? I might have a notes payable, I might have a mortgage payable, but right now I just have one account, don't I? Which is accounts payable, so there's my liability. So that's going to be a pretty easy number to find, right? And I'm going to add that to a brand new world, owner's equity, because we subdivided everything in that closet under this umbrella. So do I know what this purple number is? I don't know what the purple number is because I've got everything in all of these little subcategories underneath this. That's the number that I need. So I can't do my balance sheet first. I have to find what this purple number is at the top before I can do that.
Oh,
Yes.
one question. So you don't, as you're going, know your balance as you're going? You get to the very end and then
at
get it?
this point, no. Next chapter will be a little different.
Okay, because that's what I've been trying to do. I've been trying to figure out my balance as I'm going.
All
It's
the
not
way.
working.
I understand, yes, but hang on to it because Thursday we'll be working on that area, okay? Good. Do we all agree that we can't finish this balance sheet because we don't know this number? Okay? Now, a balance sheet is like a picture, like I took a picture on that particular day. Just like what Jessica just said, because I need to know what my balance is on that day. But I could say my balance is $370 in cash, and the minute that I finish that, I could run out here and swap my debit card for another $100, and it's going to be different, isn't it? So your balance sheet is going to be taking a picture of your business at that particular moment in time. So because of that, when you do a balance sheet, it's going to have a date on it and say, this is where my account stood on that particular day. Okay? Any questions? Thumbs up if you're good. All right. Now let's look at the two statements before that. So I'm going to go ahead. We know this is where we're going. So now we kind of see what our end goal if we're looking to the future. So let's go backwards just a little bit. I think I'll do this in some separate colors as well. My first one is going to be my income statement. My income statement is a really important statement because banks, prospective customers, all sorts of different people are going to want to know how much money did you make in your business? How much money did you spend in your business? Okay, with Sabrina's example earlier, we know that she put $2,000 of her own money in. She could have been Bill Gates and put $2 million of her own money in. It doesn't reflect how this business is doing because we don't know how much revenue that she brought in for what she was doing and how much that she really spent on what she was doing. So, yeah, this is important and it's going to have an effect on her company. But right now, let's just see what you were in business to do. How'd you do? That's what an income statement is. So there's going to be two things on an income statement. The first thing is going to be revenue. And the next thing is going to be expenses. Those two things right there is all that will ever be on your income statement. You may have more than one revenue account because you might have interest income. You may have a piece of property where you're renting out some other stuff. You know, somebody's renting the garage for their lawn mowing business or something, and you're getting income coming in from that direction. You might have some more revenue accounts, but right now, we've just been dealing with one revenue, and that was whatever you were in business to do, and we called it like delivery fees, I think is what we called it for the business that we had going on with Sabrina. Okay, are you good with that? What is this going to tell us? This is going to tell us if we made a net income or the opposite, which we do not want to do, a net loss. If we spend more money than we make, obviously we have a net loss. Hopefully we will make more money than we spend and have a net income. So we're looking at these two pieces right here under this umbrella. That's all we're looking at on the income statement. Any questions so far? Thumbs up if you understand. Okay, good. I'm going to erase this and go up just a little tighter on it, so I'm running out of room.
So are they pretty clear on how to make it say that it's a revenue and not a capital or a credit, but it's a revenue?
A revenue is going to be any transaction that you have made money for your business doing whatever it is that you're in business to do.
Sometimes I couldn't distinguish if it was something that somebody did for you or something that you did for somebody. I couldn't tell what they were saying.
When you're reading it.
When I'm reading it.
Yes. And sometimes you really have to look closely and examine those transactions so that you know exactly what they're doing. Okay. Do we all agree and we all know how to come up with our net income or our net loss? So if I'm using this pink pen and I'm looking here, can y'all see where my body is? Everything over here is all working towards this purple owner's equity, right? So I have just taken care of these two sections. Do we agree? The second statement, well, let me get a different color here. Maybe this will work. The second statement is going to be my statement of owner's equity. And on this statement of owner's equity, I'm going to start at the very beginning of the month. What did I have when I started this business? Well, on this example that we used in the book, where we started with Sabrina's delivery service here, we had, she started with nothing. So her capital at the beginning of the month, whether it was the first day of June, the first day of April, I don't remember what the example was in the book. But whatever the capital was at the beginning of the month, she didn't have anything. She made an investment right towards the beginning, and she put in $2,000. Now, it could be that as the month went on, and this will answer Jessica's question too, as the month went on, maybe Grandma said, you know what, Sabrina, you're doing so good, let me give you $500 towards your business. Did Sabrina earn that $500 as a revenue for her doing business, or is that an investment in her business? So it would go into capital and then be reflected into cash. When she's doing the delivery, knock, that's the revenue. When the neighbor says, oh my goodness, I'm so proud of you for doing all of this, I tell you what, let me put $1,000 in your company too. Did she earn that, or is it an investment in her company? So those go through the capital account.
That's why it's so easy to twist things around.
Yes, it is. But this is boots on the ground, so to speak. This is what you are doing for your business. If you're a hairstylist, you are working. You're working. That is the part of business that you're working. Okay? We've already dealt with the working part right here under revenues. This is investments where someone has provided money. And in this instance, Sabrina provided her own money. She took $2,000 out of her own accounts and stuck them over into this. Okay? So now, have I dealt with this? Then I'm going to say, okay, what about here? How did I do this month? So I'm going to take my net income. Of course, that meant day, right? But it could be that I had a net loss, which would do what to this? Subtract, right? Because that could be a minus. But in this instance, I have a net income. And whatever I have figured up here is going to be used right here. So you use the last figure on your income statement, you're going to use it on your statement of owner's equity. They're tied together. So far in this statement of owner's equity, I've accounted for my capital, and I've accounted for my revenues and my expenses. Is there something else in this world, here's my umbrella, that I have not talked about? Drawing. Okay, so I have to still handle drawing. So at this point then, I'm going to do what to drawing? Is drawing going to make it go down?
Yes.
Yeah, it's going to be a minus, isn't it? So I'm going to subtract my drawing, which is going to give me my ending capital. My capital at the end of the month. June the 30th or May the 31st or whatever the month is. The month that you started up here at the top with nothing, you're going to add any investments, then you're going to deal with your net loss or your net income, adding or subtracting it. Then of course you have to subtract your drawing, and that's going to give you a number at the end. The number at the end of this statement right here is reflective of what? This, and this. So guess what it is? It's the number you're looking for your last statement. Because now you know what your owner's equity is. So you're going to use the last number on your statement of owner's equity, and you're going to plug it in right there on your balance sheet to see if your assets equal your liabilities plus your owner's equity. Does that help a little bit? Okay, I want to flip over one page. It's probably going to make you dizzy by me flipping this. I'm sorry. And I'll drag this down too. This is also in your ebook. And I'm not intending for you to be able to read this. I realize that you cannot read these numbers from so far away. But I do want to point out to you a couple of things. Oops. Sorry.
Oh, vision is not what it used to be.
I know, it's hard to get this little puppy set up. Okay. I'm starting at this beginning, way up high that I can't reach. Okay? That's my first statement. And it says income statement. Are you watching? What is included in the income statement? There's only two things. Think about your umbrella. Picture it in your brain. What is right here in the middle? What's the meat of my company? Revenue and expenses. That's on my income statement. So I'm going to start out with revenue, and then I've got my expenses. Okay, I need you to look this direction because this is really important. There are two columns. Column 1, column 2. I realize you cannot see those, but you can kind of get the general gist of these colors, right? Those two columns do not mean debit and credit. Did you hear what I just said? This is not saying left is debit, right is credit. That is not what these two columns are. In fact, these two columns are like subtotal and totals. It's a little place for me to work with my numbers and my total numbers, okay? Think about that. Look at my expenses. Here's all of my expenses. I've listed. This is my total expenses.
Oh, okay.
We only had one revenue account. But if I had 3 revenue accounts, what would I have done in that green area? It would have been just like this. 3 of them added up to my total revenue over there. Okay? You see what this is? This is like a little working subtotal place. Here's my totals. And my last figure here, which I know you cannot see, is going to be positive because my revenue is
More than
my
expenses.
expenses. If my expenses were huge and my revenue was little, then I have a net loss. Okay? You with me? Thumbs up if you're with me. Okay. Now we've handled, can you see your umbrella in your brain? I can't write on this nice board here. But I've got the middle part of the umbrellas handled. Remember my goal, I'm trying to get to my owner's equity up at the top. So here is where I finally get my big owner's equity number. So I started, and I'm going to go ahead and make this bigger so that you can actually read this up here. Can y'all see that sort of? I'm starting it. I've got the name of the company, the name of the statement. And by the way, notice that these say for the month ended. Because this is not a snapshot. This is all of the month. What I've done this month in my business, revenues and expenses wise. So I've got this going on. I've got 2 columns again. Those 2 columns, once again, are not representative of debits and credits. It's like a little working column over here and another column over here that I'm subtotaling in. Okay. Starting it out, this example has Damon Williams as the capital on June the 1st. That means at the beginning of the month. You with me? So at the beginning of the month, they started out, they didn't have anything. And they added some investments. Not revenue that they had worked with their hands and created with their job, but an investment. They had taken the money from some other point and put it in, or someone had given it to them, or in some other, they transferred it over there, in other words. So we've got an investment that happened during the month, and where am I going to get that figure from? My what account? Starts with a C. Capital. Going to get it from my capital account, okay? That's what's happening right there. My investments that happened during that month. And then from that, I have self-explanatory. That's my total investments. Of course, if I had started out with a balance and then I'd made more, you would have added those 2 together. Everybody agree with that? In this instance, it's still $2,000. From that, then I have net income. Where did I come up with that net income figure? This little arrow is telling me that it comes from
income statement.
Comes from that income statement, the statement above it. Remember how I did revenue minus expenses? And I came up with net income. And now I need that net income figure. And I'm going to use the net income figure on the second statement. So do you see, I'll scoot it over just a little bit. Do you see how they're connected? Do you see that arrow that's connecting those two? Of course I have made money, yay, but I withdrew. So my next line is my withdrawals. So am I going to have to subtract those two? But hopefully my net income is more than what I withdrew. And if it is, then I have an increase in my capital. Could I have drawn out more than I made? Yes, so I could have taken $2,000 out, couldn't I? Which would have left this as being a decrease. So you have to think about what this actually is meaning. Once I have those done, then in this instance, it is an increase in my capital because I did not withdraw more than I made. So I'll take my total investments plus my increase in capital, and I have my brand new capital, which is my big owner's equity number that I was looking for at the top. The purple one across the very top. That's what this represents. So now let's move it up just a little bit more. Maybe. When I move it up just a little bit more, and I know you can't see everything over here on the left, but notice the difference here. This is a snapshot on June the 30th. These are my balances. Up there at the top, do you see how it's just for the month that it's a little different? Because cash, all of my assets over here, and I know you can't really read all of those as they're going off the page, but here's all of my assets on the left-hand side of my equal sign, and they're going to be equaling everything that's on my right. So you can almost, if I wanted to draw on this, which I really would like to, it's going to be right here is my equal sign, isn't it? So everything to the left equals what's on the right. So my liabilities, and when I add my capital, and by the way, which capital? Did I have $2,000 right here? That's what was in my capital account. Why am I not using $2,000 right here? Oops. Because where's this figure coming from? I had to find what the whole umbrella was to find my big owner's equity number from the top. So you have to do the statements in this order. You have to do your net income, your income statement to find your net income or your net loss that you use on the second statement. Once you finish this one, your big umbrella then is here, and that's what you use for your total capital there. And you add those two together. Now, does your left side of your equal sign equal your right side of your equal sign? And it does. So those are your three financial statements and how they all fit together.
Three financial statements. What's the first one called?
Income statement.
Second.